this on Teams, so all of you can access it there. It's not an assignment.
And if you get it by the 5th,
And I'm not going to hunt it down. Huh?
if we get it in by the 5th, it'll go on this quarter or next year?
Yes.
Okay.
I hope I'm going to try to get it in. I'll try to get it on Thursday.
Would it help if we like turned it in Friday?
No.
Okay.
I'm not going to. Oh, so you got to do the DBQ.
Yeah.
So you have pen, paper, all that. There's a seat on the hallway for you. You bring your documents, your outline. I'll come check on you and stuff. Oh, wait. Josh. Go post it. I have extra credit. It's not going to be an assignment. Post it on Teams. If you check it, extra credit. Okay, so a couple things in real fast. You'll notice this on Teams. I posted this. I'll post it again tomorrow. So it'll be on there on Teams. It'll be an opportunity. It's due on Monday, no later than that. 3 different chances. There's a list of movies like we did for the Civil War. Brainstorm outline and pieces for one of the essays. In the review book, there's a whole bunch of practice essay questions. Pick one of them. Or the other chance you have is for the DBQ. There's a DBQ on the U.S. entering the World War I. Same deal. Be as concise as possible. So 1 or 2 words. For the brainstorm list, all I want is 1 word. My expectation is if you write it down, you're good. If you put down Zimmerman, I know you need a Zimmerman note. So don't worry about it. I mean, this is like you're going to be like, you got 5 minutes before you really start writing. You got to get it organized as quickly as possible so you can write. And then if you use Doc 1, have it relate to a fact, outside information, make sure that your topics are in your thesis. Do it like a 5-paragraph essay. I'll post it again tomorrow. Sound good? And I know we have to have homework over spring break, and I know we have the review packet, and I know what you're thinking. I'm giving you too much joy. But, which by the way is not a bad band from the 1980s. You've never heard of Too Much Joy? Okay, moving on. And you have to get that in, but I know I'm giving you a lot of work, but don't forget, after the test and after doing the final, it's going to be nothing but what? Wall sits and bar hangs. Fitness after fitness, yes. I will have to bring in a comfy chair because if you guys are going to be working hard, I need to relax. Who agrees? I'll sip on a nice tea and watch you run. You don't agree? We do wall sits while hanging. Okay, so with that, I have some things we'll do. We'll finish up any loose ends, but it's actually kind of nice. We'll have our final within a couple weeks of the APs, so it's still pretty fresh in your mind. So on finals week, you won't have to come. All things being equal, unless somehow there's a big change in policy, and let's hope not, right? But that'll be nice if we give all of us a week off, and then we'll have. I add some stuff like I do every year. I couldn't really do last year, but fun stuff we'll do involving wall sits and bar hangs. Should we do time miles too? We just hit the track and you got 4 minutes. If you don't finish in 4 minutes, you just keep going till you finish. How fun that would be. Huh? Wall sits with socks are fine. Yeah.
You should just see if you can get the highest max.
Huh? Only what deadlift if you make sure you keep your legs straight the whole time. So that, yeah. I am so tired of backs, of healthy backs. Sick of them. That's you. I have some back issues, so I know. All right. So, yes, the cause of the Great Depression. Oh, the review test. I did give everybody 1 more day. Not review test. I'm sorry, take-home test. But people are doing really well on it. And there were some of you that did not have work done before we started going to full time. I will give you the opportunity of getting a few things. I will give you some points on that. As I said, I think the hybrid schedule is really hard. But don't just turn things in and expect me to find it. It doesn't work that way. You have to tell me when you turn it in, and I'll go look at it. And don't send me a chat saying, by the way, I turned in assignments. Good. I'm glad you did. Have fun with that. You know what it is, and I can check it and give you a grade. Oh, and if sometimes if I put it on Teams and it doesn't sync, let me know. All right. Now it's kind of nice where we start doing more paper stuff, and I can just type it in. I know exactly. It's easier, but we have this. We still have kind of a hybrid thing in Teams. Yes.
And then for the maps, do you want us to put it out ourselves for maps?
I made copies of it. They just did not come to me, but I will have them tomorrow.
All right, thank you.
And so I'm sorry about that. I'll have them tomorrow. And so if you're not going to be here tomorrow, I'm sorry. I really have to come in today. And I will also put a stack of them by the front door for DOI. Yeah.
The maps, the movie, and the notes is.
Yeah. For the notes, I won't make. The notes, by the way, the notes for World War II, I originally was going to have to do on Wednesday. I just had it in my head Wednesday because you guys had the ACT. I keep on forgetting. Just I wasn't thinking Wednesday's still going to be digital. So I'm going to give you one more day. So you can ask questions. The reason why is I want you to ask questions and talk about it. But the map and the maps and the 48-minute video on from World War II color, the Gathering Storm, which is so well done. The colorization of that is pretty amazing. And it's really good. And that we'll do on Monday. So let's go to the causes of the Great Depression. So we went through trickle-down economics, and don't forget the main element of trickle-down economics: keep wages low, funnel money to the hands of the wealthy. What would they do with the wealth?
Invest.
They'll invest in factories and build and create jobs. The whole idea is they don't have enough money. So you give them more money, they'll automatically start hiring people. They'll hire workers, and that will spread prosperity, and the wealth will trickle down. And so that's why they don't want such things as, the big thing is tax cuts for the wealthy. And usually replaced with tax cuts more on working people. But that's the idea, is they have more money, they don't pay as much taxes, they'll invest more in business. But don't forget also deregulation. I keep emphasizing this, but the monopolies are such a big deal. Especially since we live in the world of monopolies now. And if you don't know what that's like, go to Ohio. You'll find out what monopolies have done to towns in Ohio. Who's been to Ohio? Who wants to go back? Sorry, my brother lives in Columbus, Ohio. And my nephew goes to Ohio State. Suckers. No, okay, so that's what it is. And so monopolies, but also add worker safety, but no regulation of the stock market, so allow for more speculation. And with an anti-union, because that raises wages. So let's get to the Great Depression. And I think we got right to here yesterday. Perfect, good. Overproduction. And overproduction is always one of the biggest causes of this. And by the way, that is a feature of trickle-down. Because if you're going to put money into production, they will produce. And what if they produce more than what people can buy? And they outstrip demand. This is going to be the question for economists to this day. Conservative economics believes supply creates demand. And so overproduction will right itself. The ship will right itself. You produce more, eventually they'll hire more workers. Liberal economics say demand creates supply. By the way, I should add, both of these are elements of kind of the regulated hybrid capitalism that everybody, or that most of the industrial world would adopt. So the biggest things were autos, construction, radio. Radios is a code for all the consumer electronics. So all this new electronic stuff was coming out, but radios were the key. But there was a wave of real estate and construction and lots of building. If you go around Helena, there are a significant number of buildings that were built in the 1920s. A lot. And then none in the 30s and 40s, for the most part. So for DLI students, if you're at home for extra credit, just that one you got to turn in online. So everyone DLI, you can still turn it online. Just turn it in on chat. Just send me a note and send me a copy on chat.
Mr. Partridge.
Voice from afar. Yes.
So can we do like all three of the extra credit chance opportunities?
Yes.
Okay.
It won't be worth a significant amount of points, but it will help. Yeah. So, and what was happening is there's overproduction eventually prices will have to drop. Because if you're producing more than what people can buy, you got to drop the prices to get people to buy. But if you drop prices, that means profits drop. And this becomes a crisis. I think you can see the whole. You produce, also, you produce more. And that can be bad for you as a company. You produce more, cut prices, your profits drop. What if it's happening to everybody at once? So we were talking about oversupply for everybody. And what do companies do? The same thing farmers did. If there's overproduction and prices drop, and you got to start making up the difference. Especially when, let's be clear about it, everybody who made this or sells this went into debt to do it. They borrowed money. They got to pay back the debt. There's no such thing as a business that's not in debt. They might be out of debt, but then they go right back into debt. What do? Not yet. Because wages are part of the wage market. You can't just lower wages because then, especially in good economic times, your workers can leave. Where's my mouse? They produce more! Every time they produce more. If profits are dropping, let's try to sell more. Every single time. The same phenomenon you see like a store or a restaurant, a small business that's, you can tell they're not doing well, when they do a 30% offset. Because you're just trying to drum up business. It's the same concept. They always sell more. And usually that means going to more debt. But they think we can sell our way out. Now, one company might do it, but if everybody does it at once, that tanks prices even more. That tanks profits even more. And eventually, then you start getting cutbacks. And then you got to start laying off. And that means less workers with money in your hand. And what happens to the sales of autos, building of houses, or the selling of radios and the brand newfangled washing machines? And that's where we get demand tanks, sales drop. And so overproduction is always a key sign of a recession. There's a recession by the summer of 29. A recession is usually considered to be 2 straight quarters or 6 months of negative economic growth. That's usually considered, but it's a little vague. Depression is just, there's no definition of depression. A depression is just some long-term unemployment, long-term bad economic times. But what made the Great Depression a depression? They called it a depression. In your lifetime, by every standard, from 2008 to 2012 was a depression. Yet nobody wants to call it depression because once you have a great one, nobody wants to repeat it. So they call it things like the Great Recession and stuff like that. But it was a depression. You lived through one. Right now, we are definitely in a recession, or coming out of a recession. But there could be, I mean, literally, we could have a boom just around the corner. Because once people realize they can go out in public and be relatively safe, like this summer, maybe, if enough people get vaccines, it might just lead to a boom. So we're kind of in a weird situation right now. For lots of reasons, as you look at me with mask on. We're obviously in a weird situation. So here's a great picture of 28, everything's great. You know, it's the big car, small car, now motorcycle, now bicycle. I think that's a pretty clever cartoon. And that kind of shows how the economy shrunk. Number 2, speculation. The allure of getting rich quick is almost overwhelming. You're starting a business, even in investing in a regular business, as in like you get in the ground floor, invest for the long term, is really hard. But if you have extra money, it's kind of easy. It's almost fun. It's like a casino. Like what the same reason people go waste money in casinos, they also blow money in the stock market, or think they do, because it's kind of a gamble. It's a risk. It can be fun. Stocks can go up and down. And I know people like that, but they don't have that much in the stock market. Government teachers, so you know they don't have much. But they really just follow the prices up and down, like, oh, this is so exciting. Because it's like a game. It's hard to start a business. And what happened was in the 1920s, the huge tax cuts were not going to production. And that is an issue. It was easier for a company, or for people who got the big tax cut, like Andrew Mellon, to speculate in real estate and the stock market. And this is one of the things about tax cuts to the very wealthy. If you're already very wealthy, you don't necessarily have this desperate need to start producing goods and make money to survive, or even to spend it on products that might fuel the rest of the economy, because you already got everything you need. And so sometimes there could be a hole in this. But that's what happened here. We saw the same thing in the mid-1980s. We saw the same thing in the early 2000s. And we were seeing the same thing in 2019 from the big tax cut from the year before. That took place the year before. But then the pandemic hit. So we'll see. But it was not trickling down. And much like today, 90% of the stock is being bought and sold by the top 1%. And so sure, they might be getting money or losing money, but the money's focused up there. And this is what we call finance. This is finance. Buying and selling stocks, bonds, other financial instruments like credit default swaps and derivatives. If you don't know what those are, you're not alone. Is that for me?
Yeah.
Can I leave? Look, I like Zion. Yeah, you're in big trouble. They don't have. I think you'll be right. I like to have them. Zion. We should go to Zion. Field trip? Oh, they're awesome. The only problem with that is you go in the summer and you basically are with. If you like people, you'll love Zion. I think it's good tourists go to these places, but at the same time, then you got to be around people. Moving on. So next, we also have the real estate and stock market bubble. So after every big tax cut geared to the wealthy, there's always a bubble. We're going to see it in Montana, I guarantee it. We have a tax cut that's going to be passed in this legislature right now, and it's geared towards the very wealthy. Also, we talk about property taxes that are going to be geared for the very wealthy, and there's going to be a real estate bubble. What it means is we're going to have in the next 3 or 4 years, even more people, very wealthy people from out of state buying up land. And hopefully putting fences around. So with that, it doesn't mean they might come in and start businesses and hire workers, but I guarantee you that will happen because it happens every time. So I can't imagine it won't happen. And what happened was when the crash hit, it exposed all the debt. People, when they were buying these and the bubble was going up and up and up and prices were exploding, everybody believes during a bubble that it will go on forever. Everybody, well, not everybody, but almost everybody. You're suckers if you don't borrow money, use your tax cut as collateral, and just keep buying. And every single time it pops, then every single time there's another big bubble, the people involved in it think it will go on forever. And then it will pop, but then the next one will happen. This time it'll be different. Every time. Guaranteed. So I don't know what the next bubble will be, and there would seem to be a bubble in stocks and a few other things and some debt instruments in 2019, but that kind of crashed. But there will be a bubble. It looks like the bubble is going to be, if I was gambling, in 2 years it's going to be, a year and a half there'll be a real estate bubble. If I had money on it, another real estate bubble. Because look at the real estate prices in some areas. If anybody looked at real estate prices in Bozeman or Bozeman is just crazy. There's going to be a bubble. Yeah. But you want to buy? I have some real estate to sell you. Sight unseen. I'm ground floor.
Those people coming in due to the real estate, due to the property tax cut, I bet those rates, I bet the real estate market will be even more screwed up.
Oh, it'll dramatically increase prices. Yeah. When a small group of wealthy people buy real estate, it increases the prices for everybody else.
Thank you, Brad.
Do you have ninja senses? You literally backed up and dumped right
Huh?
in the pickles there.
What's that?
You were backing up and you dumped.
Yeah,
right
I know.
before the thing.
I have talents. You can't try. I'm just born with that skill
You're a ninja.
to avoid pickles. So that. Number 3, the gap between the rich and the poor. Inequality of wealth was expanding dramatically in the 1920s. So here are yearly incomes. And once again, as I told you, don't worry too much about the value of money then compared to today. There's been a lot of inflation. It's just different. But the top 1% made about $10,000 in over. But we're talking from $10,000 all the way up to very few are making well over $1 million a year. And the vast majority, less than 2,000. In fact, remember, half the population was below the poverty line. So there's a huge inequality of wealth. But if you have a system set up to funnel money to the wealthy, you're going to get that. And this is the 0.0% share of wealth. You see the, right before the Great Depression. You notice how the 0.01% of wealth was very low for 40 years? That was conscious economic policy, called the Great Depression, to try to get as big a middle class as possible. In 1980, made a dramatic shift, and it's skyrocketing again. In fact, we have a shirt. Is that a Reagan Bush? Yeah, Reagan Bush, that's when the shift happened to conservative economics. Yeah. So, and that's good or bad depending on your point of view. And so with that was the goal, trickle down economics. And you could say this might have led to production or not, but it's going to lead to inequality. If your goal is to funnel money into the hands of the wealthy will get more money. And more control, more economic power. And don't forget the monopolies just skyrocketed. And then the growth of finance. Finance, the buying and selling of stock. The financialization of the country started in the 20s. It went away. Now it dominates. You know, big finance actually owns most of the monopolies. Boeing, for example, is just owned by big financial interests, and they're destroying Boeing, which is, I think, an unprecedented catastrophe. It's actually scary what's happening to Boeing. You know what Boeing is? You know, they make airliners? Yeah, it's what's happening to Boeing, I think will have lasting effects for I can't even measure how bad that is. But it kills demand. And why does it kill demand? Well, eventually, the vast majority of people aren't going to be able to afford the debt and afford those products anymore, and they have to quit buying. And those on top can only buy so many cars. They can only buy so many radios, etc. They can only build so many houses. Sure, they can build some, but only so many. And so you have a significant number of people with more money they know what to do with, and more and more people with very little. And that is an economic but also political ticking time bomb. Because the extremes always happen in every situation in world history. You either are going to have, almost always it leads to some kind of a dictatorship of the very wealthy, but you might, fascism, something like that. That's what happened during, or it could lead to something else. Yeah, this is a time bomb. And I thought this cartoon was kind of clever. By the way, you can tell this was a newspaper. Then they scanned it. You can see the little pixels from the newspaper. I thought that was pretty cool. Some of these I found you could actually read the print behind it. It makes it kind of funny. But clever cartoon. I think it would have been more effective if you would have said like 99 people here. But financial failure. And this finance, the failure of finance in the banking system, especially double.
No.
They let you out?
You made me feel it was a sugar cookie recipe.
Why would you go for sugar?
Something was true. You made me feel like something bad happened.
I did?
Yeah, you were like, you have to go immediately. And I'm just like,
It said on the bottom immediately.
yeah, but like
I'm sure that sugar cookie was worth taking you out of class too. So with that, so there's no regulation of the financial system. Nobody knew how much companies were making. They could lie about how much money they made. They could lie about how much money they lost. They could tell one thing to one person and tell something to somebody else. So they could hide big advancements about raise stock value or drop stock value, which is today that's against the law. It's called insider trading. And remember I told you how Mellon was telling everybody the stock market is fine and buy, while he is telling his stockbroker to sell. All these kinds of conflict of interest, and there's no problem. Banks did not have to there were no regulation on banks to keep deposits in. In fact, banks were making risky loans like mad. Why do you make risky loans? Well, you can charge more interest and make more money. There's another thing too. In a boom, everybody thinks we're all making money. So in a boom, it doesn't seem that risky. By the way, that means in a bust, everything seems risky. In a boom, we're all going to make money. And banks did not have to keep reserves on hand. Every state had a hodgepodge of rules, most of them unenforced, so banks were taking in people's deposits. They don't hold on to it. They loan that out immediately. And they're hoping that all their depositors won't come back at the same time and ask for their money. But what if they do? I should ask. If you might say, wait a sec. Banks still shouldn't make risky loans because that could hurt the company. Don't forget, these are corporations. Limited liability. If the person making the loan gets a big fee for every loan they make, what are they going to do? Just make loans. And so, with that, debt is going to skyrocket because it seemed like everybody was going to make money and the whole thing was built on debt. Debt on its own is not bad. But if you have too much debt, if debt is on top of debt, and people are borrowing money from people who borrowed that money, I think you might see a problem. Now they get, starting with the Great Depression, they really start looking into economic data. So most of this data we have now is either looking back or starting in the Great Depression. Part of the big thing about the New Deal was we got to know if there's going to be a depression or not, even though it's still really hard to do. This is the percentage of household debt, so how much consumers have. And this gives you an idea how much debt there was with the Great Depression. It was 100 is the equivalent to the size of the entire U.S. economy. And what happened? People couldn't afford that debt anymore, and they quit buying, and it tanked. I should add, there is very conscious policy to keep that debt low. Beginning in 1980, and especially in the late 1990s, so beginning with President Reagan, and then with President Clinton, I should add this was a bipartisan plan. Clinton was a Democrat. They basically got rid of these controls, and debt would reach even higher levels in the year 2008. Could there have been a worldwide depression that year, too? Debt was nearing that in into 2019, in the pandemic. Yeah.
Did World War II also have an effect on debt?
Not on consumer debt. Because in World War II, actually, that decreases debt, much like the pandemic did. If people aren't spending money because everything's going to war or they're afraid to go out, it lowers debt. Federal government debt will go up. But government debt is significantly different than consumer debt. If I borrow money, I got to find a way to find dollars and pay it back. If the government borrows money, they print the dollars. So they have a totally different thing. So not only that, we have interlocking debt. And this is a phenomenon that happens today. It's actually a big problem, except for the fact we have mostly banking monopolies, so it's only a few banks doing it. Back then there were more banks. But what was happening is all these people just loaning money like that. Loaning money, just loaning. And banks were soon loaning more money than they have. So they would borrow from other banks. So just imagine we have Bank A. And they loan money to Bank B. You ever get what I'm coming at, right? By the way, what does A get in return? Not the interest. They get a piece of paper that's a contract that says Bank B will pay it back plus interest. Has everyone got that concept? They get a piece of paper. What can they do with that piece of paper? Huh? You're on the right track. Huh? Sure, they can sell it and loan it, or they can use it as collateral to borrow more money. An IOU is an asset. Banks can loan that. They can loan part of it. They can chop it up and put in the other like little things called bonds and sell those. That is an asset. They take that and sell it immediately. So I guarantee if you go talk to your parents and they have taken out a mortgage for a home, like virtually everybody who's bought a house, buys a house in the United States, they take a mortgage, they borrow money. An asset. Ask your parents, I'm serious, if they have a mortgage. Does the same bank that you took the mortgage out, do they still own your mortgage? Are you still paying that bank? And I guarantee it, 99.9% of you will say, your parents will say no. The bank will take it and sell it to somebody else. We'll sell that debt, sell that debt, and sell that debt. So my wife and I had a 15-year mortgage. It was sold 4 different times, 4 different things. So that's an asset. So to get the point, they're borrowing money. This is just this massive trade of borrowing. So let's get back here. A loans it to B. B, they'll take that money and loan it to C. C will loan it to D. D will loan it to bank E. And who does E loan it to? A. Do you see the problem? If one bank isn't repaid and they go under, what happens to all the rest of the banks? Like a row of dominoes. And that is the interlocking debt problem. And that's what happened in 1929. Because of banking controls under the New Deal, that did not happen again till, once during the 1980s and then big time after 1999. So what does that lead to? A bank panic. Well, everybody will wait, hear their bank shuts their door and they all go at once to get their deposits out, or they hear their bank's in trouble. If everybody goes to the bank at the same time, they don't have enough money. So they shut their doors. Can you imagine the panic if somebody, if you had your life savings in a bank and all of a sudden the bank is closed? That little piece of paper that said your deposit, your life savings, what is that worth? Nothing. Probably less than nothing. And then this leads to other bank failures. So let's go to bank A and bank B. Let's say all of us, every one of us here, we put our life savings in bank B. Bank A shut their doors. Are we saying, oh, bank B's fine? No, what are probably a lot of us going to do? Yeah, go into bank B, right? And what will happen to bank B? Even if it was healthy, it might shut its doors. And so that's where it triggers the more even healthy banks. And the banks to survive, they're not scared to loan. In bad economic times, we get what's called a credit freeze. They'll raise interest rates. They'll put more requirements. They're more reluctant to loan money to people because they're not sure if they can pay it back. If there's high unemployment, they're looking, hey, you might have a job now, but tomorrow you might not. I'm not going to loan you money. The credit freeze would last most of the decade. From 2008 to 2012, the United States had a credit freeze. And you could borrow money, but it was much harder and higher interest rates. Credit freezes are pretty scary. So look at all the bank failures in the Great Depression. That's pretty shocking. The Reagan administration, they cut a certain regulation on a kind of bank called savings and loan, and they all broke themselves in about 2 years. And then when they cut the regulations under the Clinton administration right here, it took about 8 years for them to destroy the financial system of the world. Which actually is pretty good timing, don't you think? I mean, that is impressive, to destroy the world financial system in 8 years. You got to admit, I mean, it would take me 10 to 12. Oh, and these are the amount of debt at the beginning of the Depression, and look how much the number of loans dropped. Credit freeze. And then we have a phenomenon that is terrifying. Everybody's favorite kind of deflation, debt deflation. So when there is an economic recession, a depression, usually, in the very rare chances this won't happen, but when there's a bad economic times, what happens to prices? They drop. Now you might think, well, prices go up because we have a shortage or something like that. No, if you have overproduction, people can't sell stuff. They got to drop the prices. And so we get this cycling ball of price drop. Cycling ball? How do I get a ball? I think I had a snowball and a cycle that came out the cycling ball. So prices are dropping. So that's deflation. Prices drop. By the way, what happens to the value of a dollar in deflation? It goes up. And one of the weird things that happen in deflation is, even if people have money, they quit spending. And you see it here. This is called the M2 scale today, but this is the beginning of the depression down. And this is the amount of money in circulation. So people, if they had money, they hoarded it. And think about it this way. Just imagine if you want to go buy a car. But you look around and you see, God, everyone's selling cars now. The lots are full. Prices are dropping. Do I want to buy it today, or should I wait till tomorrow? Because tomorrow, what's going to happen? But what if everyone does that at the same time? Then people don't buy cars. So you have this issue of deflation in bad times. And that means people with money. The same thing is, let's say you look around and half your friends lost their job. You're starting your job, and you're like, are you going to go spend your money? Better hold on to this. By the way, would you put your money in a bank in 1930? No, you'd be like my great-great-grandfather who, do I know my greats, right? Great-great-great-grandfather. The same one who had the store I told you about that they threw rocks through during War Madness. He hated banks anyways. So he took all this money and buried it in big pickle jars in the backyard for the store. Most of them were coins, but silver coins. In fact, when all the coins were silver. It's like a penny. They actually were copper. Buried it in the backyard. And then he died of a heart attack long before I was born. And they sold the store, and they never found those jars. So they're still there, probably. And the store is gone. When my grandmother died, and my mom and I were driving around Williams, now a much bigger town than the little place we used to live in, South of Omaha. We're driving around, and we went to where the old store was, and it's no longer there. It's a parking lot over the store, so probably over those jars of money. And I am not making this up. Does anybody want to guess? It's a parking lot for what? A bank. Yeah.
I was gonna say we should all go and dig them up, but we can't. So.
Get a shovel? Yeah.
Yeah.
Yeah, just go there with jackhammers and dig up the. All right, so when we have a depressed economy, what happens is if no one is spending money, all of a sudden there's what's called a liquidity trap. I know it's a great term. You even know what liquidity means? Economic terms are fun. Liquid asset.
All your assets,
If it's money, yeah. It has to be like cash money you can spend right now. That's your liquid assets, your amount of money. So like your property is not liquid because it's not cash, you have to sell it first. But what's happening is all of a sudden there's a liquidity trap. There's a significant number of people who don't have money to pay back their debts, and corporations don't have the money. What do you do if you can't pay back your debt? Two things. First off, you cut spending, don't you? Now, you as an individual, if you spend more than what you should, it's a smart thing to do to cut your spending, right? Pay back your debt. But what if everyone does that at once? Do you see a problem here? If everybody does that at once, sales drop even further, prices drop even more. Or another good one that people do, they sell off all their assets at once. So people start selling property. They start selling their stocks, their bonds. People go sell their cars. You know, they go to the pawn shop and sell stuff. Now, once again, if you spend beyond your means, maybe you don't need that fourth boat and that goat you have. Who has bought too many goats the last time? It's a big problem. Goat overproduction. You sell off your goats, but what if everybody does it at once? And this is what happens in bad economic times. Everybody pays back their debt all at the same time. I think you might see where this is going. Asset prices tumble. I mean, fall off the face of the earth. So, real estate values. Now, it might be variable. Like today, there's some areas we mentioned before, real estate values are just exploding. But in some areas right now, it's really suffering. 2008, it was like the whole state of Florida was for sale. You drive through Florida and it's just mile after mile of for sale signs. Especially like strip mall, sale, 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 sale. Well, everything falls. It just falls in value. We're in a weird, because of the pandemic, so there's a lot of people owe more money to know what to do with, and a significant number who don't have any money. And it depresses the economy even more. It makes it worse. And here's the amazing thing. What happens to debt during debt deflation? there's more debt. If everybody pays back their debt at the same time, actual debt goes up. The value of the debt. Why? Remember what we said before? Deflation raises the value of the dollar. So if you try to pay back your debt in deflation, you're paying back dollars of greater value, and that sucks more money out. We went through debt deflation in 2009, 2010. It was still going on in 2011. So that's in your lifetime. I know you're thinking, first off, you're pretty young and you didn't see as much. But we live in Helena. And Helena is a very stable, we're a government town, and so it's just, okay, so, and this, what happens? The cycle starts again. So here's the inflation rate. And look how prices tumbled during the Depression. Isn't that pretty remarkable? The prices drop, the index, think about it in terms of the ratio is about 60 down to 42, or in a drop of about 20% in places. Next, government failed. How did government fail? Well, we already mentioned once before, without regulation of stocks and bonds, that allowed for a bubble to boom way out of control. And also, there's no safety net, which was part of trickle down. But having no safety net helped kill demand. When there are layoffs, especially after the New Deal, if you lose your job because the company had to shut the doors because they weren't selling, you get unemployment insurance, which is about 30 to 45% of your former pay, depending on what state you're in. Montana is in the middle of the road. Some states pay a little bit more. Most of the southern states pay virtually nothing. But if you go from having a paycheck to having no paycheck, a lot of you, demand tanks. The safety net keeps demand, at least doesn't allow demand to tank. So if you're laid off and get unemployment insurance, that means you can still buy some things and demand won't go off the face of you, which will lead to debt deflation and really cycle things out of control. That's why it was such a big deal to have unemployment insurance and then give a little bit extra. Right now, $300 extra than what they normally did, because demand would be off the face of the earth. Remember I told you there was a recovery coming up probably? It would be much less of a recovery if people didn't have that little bit of a safety valve. But that killed demand. Next, the Federal Reserve, created back in 1913, it controls interest rates. It has immense power over the economy. In fact, the chairman of the Federal Reserve, Jerome Powell, just made a big speech on that. But they should have raised interest rates when the bubble was forming. If you raise interest rates, it makes it harder to borrow money. What did they do? No, they actually dropped it. They made the bubble worse. And then they realized it too late. And then when the crash hit, they should have dropped interest rates to avoid the problems of a credit freeze. No. They kept it stable and then didn't drop it fast enough. Like today, right now, in fact, most of your life, the economy has been so stagnant that interest rates have been just incredibly low. The Federal Reserve right now, and Chairman Powell of the Federal Reserve said, we're going to keep interest rates at the same level for the next 2 years. Before you go, does anybody know what interest rates are right now for the Federal Reserve? So the lower they do, then banks, it lowers bank rates. It's effectively zero. It's actually basically negative. By the way, when I was your age, it was about 12%. Tomorrow we finish this. Don't forget the take-home test if you haven't done it. Got it done? Yeah. You are good people. Got it. All right. We'll see you tomorrow. I'll put it all together then. When you get it, you can look at it. Clear out. Is it 84 or 80? 84, okay.
I don't know if I can.
No? Yeah. Give me 1 sec. If you have your note from yesterday, I will look at it and give you credit. I just need my sheet. Oh, good. if you want quick show me notes, I will do it and give you credit. Yeah, this is Special topics, I can't do it as a joke. I can always say it. And they try to write our last, you get your mark. You got it, good. Good night. Oh yeah, I'm gonna give you number one more. Don't get food poisoning. You know what? Don't eat at strange taco places.
Those aren't the best.
I gotta admit though, when I was in Mexico, yes. When I was in Mexico, those little stands, you know, those places, that were the best food I ever had. And you just gotta just grit your teeth and do it. Oh, that was so good. You can know area under the curtain.
I said we would fall asleep for
Bro. Don't worry about it.
Oh, I said what? Oh my God.
Everybody sit